in litigation and advisory in the field of income tax, transfer pricing, international tax, service tax, GST, IBC, with regular appearance for clients at various litigation forums across India. He has represented several clients at the first appellate level and before the income tax appellate tribunal. We welcome Kapil sir and request you to kindly take over the charge. Over to you, Kapil sir.
Thank you so much, Akshay. Respected Chairman sir, and other friends and dignitaries of the Nagpur branch of ICAI. Akshay, how do I think I need to change the view. Hi, this is better. This is better. The view is different. Yeah. So thank you, Nagpur branch, for giving me this wonderful opportunity to interact with all of you. It's always a great pleasure to be able to connect with all you dear friends and share whatever limited knowledge I have on the subject. It is truly an honor to be able to join this forum and share certain thoughts on the subject which has been assigned to me today by dear Saket, which is considering all the amendments that are going to be applicable or any compliances that are going to be applicable with effect from 1st July, which we are almost there. I would like to touch upon certain of the certain sections which will become effective with effect from 1st of July, apart from certain other judicial pronouncements that I have come across while researching my cases, which I would be appearing at High Court in the coming weeks, and which I really felt would be of great importance and assistance to all of us in case any of our cases have similar facts to what the Honorable High Courts have been holding in the recent past. So without further delay, we'll just start with certain sections which I feel are going to be applicable and are going to have a great impact. And I will also share certain confusions that are prevalent at this point of time, and what solution that I feel could be one of the possible solutions. And after my talk is over, definitely we can have an interactive session where any of the queries pertaining to any of the sections can be definitely addressed to. So without moving on, as you're all aware, TDS, TCS has always been a pain for each and every chartered accountant and each and every business house. And I'm sorry to say that the pain has been intensified now, and it is going to be even more painful for all of us going forward, as if the pain was not enough earlier. As you're all aware, 1st July, the TCS, first let us go to the TCS, which was made applicable last year from 1st October 2020, wherein the responsibility for tax collection at source was introduced for the first time on sale of goods, subject to certain conditions, so far as which are the assessees to whom those things are applicable. You all are aware that it was applicable to people having a sales turnover of more than 10 crores in the preceding year. And if you were making sale of goods to any person for an amount excess of rupees 50 lakhs in a financial year, then TCS at the rate of 0.1% was required to be collected at source. This is a transaction which has been going on since past 1st October 2020. And most of the people, I'm sure, have already started complying with it. I was discussing the provisions with Saket the other day, and a very interesting perspective had come up at that point of time, that if you read the section carefully, section 206C1H, which deals with TCS on sale of goods, applicable to business houses making the sales, you will see that the common parlance that we all are aware of, that TDS, TCS is applicable at the time of payment, credit, whichever is earlier, etc., is no longer applicable to this particular section, which was, frankly, when I had also read it for the first time, it was a very unique proposition because it had shifted the liability from credit basis to cash basis, which is very unlikely and not in tandem with any of the other provisions if you see with pertaining to TDS or TCS. If you read the section carefully, it says that TCS has to be collected on receipt basis. This is one of the issues which I also felt at the time when I had read and the section was getting introduced, as to how is it practically possible for any business house to keep a track. First and foremost, the only thing they are aware of as on 30th September is whether the turnover was in excess of 10 crores in the previous year or not. Once they have established that yes, my turnover was more than 10 crores in the previous year, 206C1H is applicable to me. The second question arises as to which are the parties जिनका अभी तक 50 lakhs का turnover हो चुका है या नहीं हो चुका है. That was again not that difficult a part because yes, what you will have to do is get a sales analysis of all the parties. Hopefully your software is in a position to check that. If you have limited parties, it's okay, but one of my clients is having 5,000 parties, it becomes a tedious task to check whether the 50 lakh threshold has been passed, and if yes, how many parties have passed it, so that in future, whenever I am raising an invoice or am I receiving a payment from them, I am in a position to collect TCS at 0.1%. Luckily, I believe most of the softwares have incorporated this condition in their system itself, that as soon as the sales of any party is crossing 50 lakh rupees, it is starting to levy and add TCS in the invoices. But that comes to a different proposition for us, which is the section says that it has to be paid on the amount that you actually receive, not on the amount that you actually bill. So even after making the amendments in the software, you are not in a position to correctly estimate as to whether the same has happened or not. If you are going by receipt basis, again, it is one of the issues because many times what is happening is, if you are aware, many times it happens that at the end of the year, a reconciliation of accounts is being made with the other party, हमारे sellers के साथ, and the balances are reconciled, at which point of time we realize कि बहुत बार ऐसा होता है कि एक का चेक दूसरे के अकाउंट में चला गया है, और certain typographical entry inadvertent errors have happened, because of which the ledger is not matching, and once you transfer certain payment which has been received by party A, mistakenly credited to the account of party B, which might have been a sister concern of party A, at that point of time you rectify the entry, and at that point of time the accounts are reconciled. The biggest problem is this, that suppose you have made an inadvertent entry with respect to party payment received from party A, mistakenly credited to the account of party B, and party A has paid you 45 lakhs for the year, and just if you consider this 5 lakh rupees error or 6 lakh rupees error, it has crossed 51 lakhs. And now you are in a position as to, because it has already crossed 51 lakhs, but the sales that you have made after that, no TCS has been charged. So at that point of time, what is the solution and what is required to be done? So most of the clients, what they have done is they have incorporated a system wherein, so far as the billing is concerned, they have started charging on the billing basis. So under any case, what you are doing is taking an interpretation which is more favorable to the department, because it is giving them more collection. So by doing that, what you have done is you have just preponed the payment which actually would have been done at a later date. So the department cannot actually have any grievance about it. Now, coming to the second point of it, what if there is a situation in 206C1H only, wherein, as you all are aware, till 31st March, a 25% rebate was granted so far as the rates of TDS and TCS is concerned. So I was supposed to charge 0.1% TCS, but because of the COVID-related concessions that were given to me, I was eligible to charge TCS at 0.075%, considering a rebate of 25%. Now, in this case, if you have raised the invoices on your clients for 0.075%, for example, I raise an invoice in the month of October to my client for an amount of rupees 10 lakhs. And what have I done is I have charged him 0.075%. And I have discharged that liability also in the month of November by making the payment of the TCS. Now, till 31st March 2021, against that invoice of rupees 10 lakhs, my customer has paid me only an amount of rupees 6 lakhs. And balance 4 lakh has not been received by me. Now, this 4 lakh is received by me, say, hypothetically on 15th of April. Now, what is the situation with respect to the TCS is concerned? Ideally, technically, going strictly by the rule of law, considering that TCS is payable on receipt basis, the amount of 4 lakh that you have received has been received at a time when the concession for TDS TCS was not in place, and as such, the TCS on the same has to be discharged at the prescribed rate of 0.1%, which you have not done till now, and which you have done in the past only to the extent of 0.075%. In this case, strictly speaking, the difference of 0.025% should be payable at the time when you have received that sum. The problem that is going to happen with this is that when you file this, you have to raise a separate debit note on the party with respect to the differential amount. And so far as your sales is concerned, your sales might not match. The sales as per the TCS records might not match with the sales which have been shown in the books of accounts. That is one of the technical difficulties that you might face. Instead, what I suggest could be done is, if you have a debtor as on 31st March to whom a concessional rate has already been charged, it is my suggestion that what you can do is you can raise a differential amount of TCS through a debit note on 31st March itself. So what that would do is that would cover the entire liability of TCS so far as the financial year 2021 is concerned in that financial year itself. And considering the month and the other details are concerned, appropriate amendments can be made in the TDS or the TCS return so that at least there is some semblance of matching with the books of accounts along with the TDS and TCS returns. That would hopefully avoid any confusions in future. Now, you all are also aware that this section was not applicable if TDS was somehow applicable to be deducted on this transaction. Now, as the TCS is applicable on receipt basis, even if you have a party which you have made sales, say of 50 lakhs till 30th September, and on 15th October, that party gives you an advance towards sale of goods of 10 lakh rupees. Even this 10 lakh rupees now will be subjected to TCS as per the current provisions, because TCS is chargeable on receipt basis. So this needs to be kept in mind. I know it's a tedious task to do, but some system or other will have to be incorporated in order to exactly find what is the liability of TCS, and if there is any differential amount which remains to be paid, I would suggest raise a debit note as on 31st March itself, pay it on 31st March and revise your returns. So at least in one financial year, we have completed the entire transaction. Secondly, the amount of 50 lakhs, as you are aware, is applicable on year-on-year basis. So if party A has made a purchases from you, say for an amount of rupees 60 lakh, yes, in financial year 2021, beyond October, you would be required to collect TCS from them on the differential amount of rupees 10 lakhs. But the same party A, as soon as 1st April starts, till the time 50 lakhs limit has not been reached in financial year 21-22, TCS would not be required to be collected till the time the 50 lakh limit has been passed again. So this is all with respect to TCS, and considering TCS is on the receipt basis, one interpretation can be that TCS is also to be calculated so far as the GST on the amount is concerned. The amount with respect to TDS is different, but so far as TCS is concerned, and considering that they have kept it on receipt basis, one interpretation comes out of it that yes, TCS might be required to be collected on the amount of GST as well. So this is an area which still has an ambiguity, but considering that the interpretation is that it is to be collected on receipt basis and the amounts that you are getting is inclusive of GST, it will have to be done on receipt basis. That is one of the interpretations which is there. And GST, it's always advisable to add the GST figure and collect the TCS from the other person because the amount would be minuscule. This is all so far as section 206 is concerned, which we all have been dealing with for the past almost 9 months now. As if that was not enough, I'll again repeat the word pain for all of us. A new section now has been made applicable with effect from 1st July 2021, which is 194Q, which is TDS, tax deducted at source, on the purchase of goods. So earlier we were dealing with the sale of goods and collection of tax at source, and now we are dealing with 194Q applicable from 1st July 2021, which deals with tax deducted at source on the purchase of goods that you would be making. The rate remains the same, which is 0.1%, but it has also been clarified that in case the permanent account number is not there, then 5% would be the rate that needs to be charged. Again, applicable only to buyers or assessees who have had a turnover of more than 10 crores in the preceding financial year, and applicable on transactions with parties from whom you have made a purchases in excess of 50 lakhs in that particular year. Now, so far as 194Q is concerned, we have gone back to the basics, saying that TDS has to be deducted at the time of credit or payment, with whichever is earlier, something that we are very comfortable with. So this is one thing which I feel is in sync with the normal TDS provisions that we all have been used to. So that should not be a problem so far as deduction of TDS is concerned. The disallowance in case of defaults, there are certain queries. If in the chat box, if it is okay, can we take the queries at the end of the session? I think that would be easier.
Yeah, that will be better. I think we can take at the end of the session itself.
Correct. We'll do that. Yeah. So any violation with respect to 194Q invites disallowance under section 40 AIA, disallowance of 30% of the expenses, as you all are aware. Now, this section, it has been held that it is not applicable if tax is deductible under any other provisions of the Income Tax Act. And secondly, if tax is collectible under section 206C other than 206C1H. So 194Q will not be applicable if the transaction is already subjected to section 206C, which is with respect to timber, etc., which have already been there for ages with respect to tax collection at source, but excluding 206C1H. So what this implies is that TDS under 194Q overrides the applicability under 206C1H. So if given a choice as to whether the transaction has to be subjected to TCS under section 206C1H or TDS under section 194Q, then 194Q will take the precedence and 194Q will have to be done. And if 194Q has been done, then 206C1H is not required to be done. So hope I'm clear on this. So this at least should reduce some confusion with respect to the tax collected at source. And if TDS is being made on a particular transaction, then the other party is not required to, then you're not subjected to make tax collected at source on this particular transaction. This is 194Q, which is being made applicable from 1st of July 2021. Moving on. Two more sections have been introduced again with effect from 1st July 2021, which are of far greater significance to all of us and which will be, I personally feel, a procedural nightmare for all of us. Those are sections 206AB and section 206CCA. These are the two sections which have now been introduced and made effective from 1st July 2021. And what they have done is they have prescribed higher TDS or TCS rates for non-filers of returns. So what 206AB and 206CCA does is, in case the party that you are dealing with, so far as making sales is concerned or making purchases is concerned, is basically a non-filer. So the rates which have been prescribed for the purpose of TDS or TCS have to be made at a higher rate for non-filers of return. Now, first we'll come to section 206AB. Now, what section 206AB does is, it has been made applicable from 1st July 2021. It specifies that it is applicable to specified persons who are non-filers. Now, what is the definition of specified persons? The definition of specified person as per section 206AB specifies that a person who has not filed his income tax return for the 2 previous assessment years and the time limit under 139(1) has expired for the same, and aggregate of TDS and TCS of this person is equal to 50,000 or more in each of these two years. Now, not only you have to verify whether the person has been filing his returns or not, but you also have to check whether the aggregate of TDS and TCS of this person was 50,000 or more or not in each of these 2 previous years. So if the person that you are dealing with is one of the specified persons, section 206AB says that TDS has to be deducted at higher of the following, meaning twice the rate which has been specified in the relevant provisions of the Act, double, or twice the rates which are in force at that point of time, just in case if any concession or something has been given, or 5%. This is amongst the 3, the higher has to be considered. So this is a big problem for all of us as to how do you determine whether the other person is a specified person or not. So what we have advised to all of our clients is to make certain declarations that you have to take from all of your clients, at least the clients who under whom the TDS transactions are being made applicable. And what you are required to do is ask them to furnish that declaration along with the details of what returns they have had, along with the copies of the returns filed, and as well as copies of 26AS, which might be a tricky issue because they might not be very comfortable sharing their financial details, but that is the only way for you to determine whether that thing has happened or not. You may take a declaration, But that declaration in future, if it is proved that the declaration is not in order, you might take a declaration without any supporting, saying that I hereby declare that I have filed my returns for the past 2 years and I do not fall under the category of a specified person as specified under section 206AB/206CC of the Act. What this does is, of course, this helps you as an evidence and is a very justifiable ground for not collecting tax at a higher rate. But in future, if this declaration is held to be false, what this would do is it would definitely protect you from penalties. No doubt about that. No penalty can be levied on you for lower deduction or non-deduction of TDS as per the specified sections. But nonetheless, the liability to discharge TDS as per the correct rate calculated under the provisions of section 206AB and 206CCA will definitely be fastened upon you, and you will be held to be an assessee in default. So the declaration without any supportings will 100% help you against any penal consequences, but will not help you so far as collection of tax, recovery of tax, TDS, TCS from you along with the applicable interest. So it is always advisable, although difficult, to take a declaration with the supporting documents justifying that he is not a specified person. And in case he has already filed the return, then then there is no reason to take 26S. If he has already filed the reason for the returns for the past 2 years, your job is done. If he has not filed the return for 2 years, then the question of 50,000 rupees TDS, TCS comes into question. But if he has already filed the return of income, the only thing you are supposed to take from him is copy of the acknowledgement, take it and keep it with you. Your job is done. And everybody, I'm sure, would understand that this is a specific statutory requirement which has been fastened on us, and there is no escapement from it. And it's better in the best interest of a client to do that. What we have also advised to our clients, as you are aware, before entering into transactions, these are, of course, see, we are talking about big clients who have 10 crores and above turnover, etc., etc. As you're aware, it would not be a bad practice to incorporate the KYC norms as are being done by listed companies, big limited companies, when our clients are getting empaneled by them. If our clients want to work, say with the Reliance or say with the bigger organization, what is required at the first stage is 10,000 documents are required from the client, including the GST certificate, Aadhaar cards, PAN cards, copy ITRs, etc., etc., which they say that are essential for the purpose of creation of parties so far as their SAP is concerned. We have introduced in many of our clients' cases where big cases are there, that in case you are engaged in that quantum of a dealing with any person, it does not harm to take all these documents in the guise of KYC and keep it in the record, which can prove useful in the near future. As section 206AB was applicable to TDS, similarly section 206CCA has also been made applicable, which is pertaining to TCS. And again, the specified person definition is the same, which we already discussed. What the section 206CCA says, that if you are a specified person, that the person that you are dealing with, and if you have made sales to that person, and that person is a specified person, meaning he is a non-filer of the return for the past 2 assessment years, then TCS has to be collected at a higher rate. And the higher rate over here are only 2 conditions. One being twice the rate specified, or 5%. So this is something which 206CCA and 206AB are going to be made applicable from 1st July now. And with 1st July, we'll all have to be extra careful with respect to whether the other person that you're dealing with is a filer or not. So far as whenever you are deciding the rate of TDS to be deducted, appropriate rates can be considered. As you're all aware, I'll just brush through it. New portal has been launched, which unfortunately has proved to be create more confusion rather than solve the confusions. What we have advised, certain things that precautions can be taken is, I was very surprised the other day to receive certain notices on email from the websites of Income Tax Department with respect to proposed penalty proceedings under 270A, 271(1)(c), which has been pending for long. And they had expected, and the due date for giving a reply was given, say, 12th June, 13th June, etc. So, and on 12th June, 13th June, when I tried logging in, the e-proceedings option was not activated, and I think it still shows coming soon. That is this. That is, I believe, the present status of that as well. So, despite having that due date, we were not in a position to upload the reply to the penalty notices that we received. So, in case any of you have also faced a similar problem, it is my advice to you to just log in. Go to the e-proceedings tab and take a snapshot of that particular thing and just keep it, so that just in case in future, if any ex parte order has been passed, we will have a very good ground for getting that ex parte order set aside, because on the date which was specified, the e-portal was not working. So it will, although it is a common knowledge that e-portal was not working, but when the time for litigation would come, say 1 year down the line, it will be very difficult to remember as to which were the exact dates when this site was not working, or which specific sections of the site were not working. So it is always advisable, just take a snapshot of that page and keep it with you in the file, so that I don't foresee ex parte orders happening, but in the unforeseen circumstances, if some ex parte orders happen, that snapshot can really prove to be of great help to all of us. I'm told that although I'm not regularly involved so far as the compliance on the website is concerned, and I'm thankful to my team who helped me with that. So they have informed me that there are too many other requirements which I believe every assessee is required to be done, in the form of re-registration of phone numbers and email IDs, re-registration of digital signatures, and so all these compliances, I'm sure, will have to be started as sooner than later. So that is something that I think we should all gear up and start doing it, so that when the time comes, we all are ready, equipped to furnish the relevant replies that are required to be done, and the compliances which are required to be done. Manual submissions of Form 15 CA and CB have been started again. You all might have read that in the press note, that in case of any foreign remittances which are required to be done, and as the portal is not working, manual 15 CA CB are permitted up to 30th June. And 15 CACB hard copies can directly be submitted to the bank, and they would be in a position, they have been instructed to remit the amount based on that document. It's always advisable at this point of time to take an acknowledgement from the bank and keep it with you, that you have furnished 15 CACB on this particular date. And very, very much advisable to keep a copy in your regular income tax file, which will help you further so far as the assessments are concerned, especially in cases where 15 CA is also made applicable and TDS is required to be made. There is a new form, SFT 15, which was required to be filed by all companies with respect to paying dividends. Now, there was a big confusion as to whether it is mandatory for every person, every company to file it despite not having paid dividends, or is it mandatory only for the companies which have actually paid dividend. The due date is 30th June. Now, the confusion still prevails. To be on the safer side, yes, it might be taken it might be presumed that yes, there is no harm in filing a nil return. But I was interacting with a couple of department officials the other day, and one of the interpretations which came out from that was that in case the company has paid dividend anytime in the past, then that company is mandatorily required to file the SFT 015, even though it has not paid dividend in this particular year. This is one of the interpretations which had been given by the department. But in case of a company which has never ever paid any dividend whatsoever, again, see, this was an informal clarification that I had also sought. So informal clarification that I had received was that just in case if no dividend has been paid ever by that particular assessee, then there is no requirement to file an SFT 015. But in case you decide to take the safer option and file the SFT 015, then the company will need to provide the details of all the shareholders, etc., and mention the amount of dividend as 0 so far as the SFT 015 is concerned. Moving ahead, I'll just take some time in just bouncing off certain provisions of certain amendments of section 148 and 148A, which have been made applicable, albeit from 1/4/2021, but which have now assumed great significance, considering what the department did was unfairly, I should say that the limitation earlier under 148 was at the max 6 years from the end of the assessment year. Assessment year 13-14, ideally, the time limit for issue of notice under 148 for assessment year 13-14 should have expired on 31st March 2020. In the guise of COVID, in the guise of lockdown, in the guise of whatever you want to say, the department started extending the limitation with respect to issue of notices, with the result that the limitation for issuing of notice under 148, which was expiring on 31st March 21, has been stretched. I'll use the word stretched to a period of 15 months. And it has been extended till 30th June 2021. So many cases you all would have received wherein the cases have been reopened for assessment year 13-14, but the notice under 148 has been issued, say sometime in March 2021. In fact, in April 2021, some people have received it. So this is a suggestion that whenever you're objecting to 148, do take an objection on the limitation part as well. Let us see how the litigation goes. So far as the litigation, so far as there are no judgments at this point of time. The provisions, the extension by 15 months has not yet been challenged, at least not to my knowledge. But do take an objection while replying to any 148 notices regarding the limitation as well, so that in future, if there is any favorable amendment with respect to assessment year 13-14, the same might prove useful to you, considering that you have already objected to that particular aspect so far as the proceedings are concerned. That might help us in the appeal proceedings. Now, it was earlier, as I said, the time limit was 6 years, 4 years, which can be extended to 6 years under certain circumstances. Now, with effect from 1st April 21, the time limit for 148 notices has been reduced to 3 years from 6 years earlier. But again, a but is with capital, bold, underline. The period can be extended to 10 years in cases where there is serious tax evasion. And what is serious tax evasion is where the concealed income, which is supposed to have escaped assessment, is greater than 50 lakh rupees. So it's a very negligible amount, negligible limit, which they have kept. 50 lakhs is nothing. So I think we are in for a long drawn litigation in future, as the period has already been extended to 10 years, and it won't be difficult to justify escapement of income of a meager amount of 50 lakhs, because 50 lakhs is nothing. So I would say that it was somehow very succinctly reported in the budget that the period has been reduced to 3 years. But I really feel that the effective provision was enhanced to 10 years. And unfortunately, that has become the norm now. So 10 years is the time that we all have to be careful now and be ready for any long drawn litigation in the future. The only ray of light that I see was a subsequent amendment, introduction of section 148A, along with the amendments to 148, which again have been made applicable from 1st April 21, which says, which require the AO to conduct an inquiry if required and provide with the assessee an opportunity of being heard by serving them a show cause notice to furnish the reply within 30 days. This is a very, very important amendment, and this needs to be, this should be the first thing that all of us should concentrate as soon as we are receiving a 148 notice. More particularly, see what 148A has done. 148A has mandatorily casted upon the AO a responsibility to issue a show cause notice. This requirement is not discretionary. This requirement is mandatory and procedural in nature. So this requirement has come into effect from 1st April. So in case an AO is required to issue a notice under 148 for any of the previous years, after 1st April 21, that 148 notice cannot be issued unless it is preceded by a show cause notice under 148A. And if the mandatory requirement of issuance of a show cause notice under 148A has not been complied with, the notice under 148 is bad in law and will be quashed because it has not adhered to the mandatory statutory requirement which the AO was required to adhere to. There is a recent judgment of the Honorable Bombay High Court in Armada D1 PTE Limited, wherein for assessment year 13-14, the notice under 148 was issued on 7th April. And a writ petition was filed that despite the notice having been issued on 7th April, there has not been issued any notice under 148A, which is a requirement, which earlier was not, but now after 31st March, it has become mandatory. The Bombay High Court was pleased to stay all the proceedings, and at present, the Learned Counsel for the department has sought 3 weeks reply to the same. So till this time, the only relief which has been granted is the proceedings have been stayed, and the reply is awaited from the income tax department in view of this. In case any of the cases are covered, I would strongly suggest, yes, writ can be definitely one of the criteria where we should and can go. And the high courts are entertaining writs under 148, which earlier used to be a 50-50 proposition. But so far as a mandatory requirement having not been complied with, it should fall within the honorable jurisdiction of the honorable high courts under 226. And we have a good chance of getting the proceedings quashed, which would just prevent us from all the harassments that we'll have to go through so far as the entire 148 is concerned and the appeals are concerned, etc., etc. So that is one thing which can be considered. The other thing that also should be considered is, I would be researching it in great detail, whether notice dated 31st March but served in April would also qualify and would also be covered. The plain reading does not seem to cover that because the 148A has been made applicable from 1st April 2021, but that is an interesting aspect that also can be looked into and at least researched upon in case that thing needs to be pursued in future. Moving forward, we all are facing the faceless assessments, and some of our experiences have been good I've been meeting a lot of people. Some of the business houses have had a very good experience about faceless assessment, but some of the experience have been absolutely disastrous. So considering that, there have been some recent judgments against the National Faceless Assessment Center also. It is always an advice in case you're filing a reply to any of the notices which have been received, or in case you are filing a reply in response to any appeal proceedings, please ensure that you add a line at the end which says that you wish to be heard in person before the matter is finally adjudicated. Please take your right for personal hearing, because it is one of the most important and fundamental rights that has been conferred upon us by the Constitution, and which should be taken up by each and every individual, each and every litigant. So there have been a couple of judgments which I'll just share against National Faceless Assessment Center, against the faceless assessments which have been completed. One is the judgment of the Honorable Delhi High Court, which is YCD Industries versus National Faceless Assessment Center. This judgment is in relation to absence of show cause notice. So if you read the section carefully, what the faceless assessment scheme has specified, that in case any addition is proposed, the AO is supposed to issue a show cause notice. You have to reply to the show cause notice, and only after the show cause notice has been served, replied, and given due importance, then the assessment can be finalized. So in one of the cases of YCD Industries, the assessment was finalized without issue of show cause notice. So again, section 144B mandates the requirement of issue of a show cause notice. And what the instead of going into the appeal, a writ petition has been filed against the judgment of the National Faceless Assessment Center with respect to the mandatory requirement having not been complied with. The Honorable High Court of Delhi has held, I'll just come to the operative part of it, that revenue could not have sidestepped such an important safeguard put in place by the legislature. And they have set aside the order of the National Faceless Assessment Center. So this is one thing. If there is a gross violation of natural justice, your right to be heard, writ petition can definitely be one of the criteria. Other criteria is if you have to go into appeal, then Commissioner Appeals Tribunal, High Court, and so on and so forth. But writ petitions are being filed across India against such illegal orders passed in the faceless assessment, and they are being duly considered by the Honorable High Courts, and reliefs are also being granted. Another judgment, Sanjay Agarwal versus National Faceless Assessment Center, again Delhi High Court, which I've held very importantly. If you read the section, the right of personal hearing in the section has been referred to as may. So what the section has done is, the section has kept the right of hearing to be discretionary. I personally feel the word may has to be challenged, because the right of hearing cannot be discretionary at the discretion of the other party. I may choose or not to choose to have a personal hearing. That is my discretion, my right. My right cannot be taken away by the legislature, especially of being heard in person, albeit through video conferencing, and give me the opportunity to put forward my case. The Honorable Delhi High Court in in Sanjay Agarwal case has held the usage of the word may cannot absolve the revenue from the obligation cast upon it to consider the request made for grant of personal hearing. Hiding behind the word may and not granting you the personal hearing, the Honorable Delhi High Court has held that no, despite the use of the word may, if the assessee has asked for a personal hearing, it is the duty of the assessing officer to grant the personal hearing to the assessee. The word may does not absolve the revenue from grant of personal hearing. So please, in any assessment that you are doing in a faceless manner, be it appeals, be it assessments, please ensure in one of your replies to demand a right to be personally heard. It would go a long way in helping you so far as future litigation, God forbid, if any future litigation arises in the case. One important judgment which I just came across today was in relation to Vivad Se Vishwas scheme. Although the scheme is over, but there have been cases where the declarations under Vivad Se Vishwas scheme have been rejected by the principal CIT. So today only I received a judgment of the Honorable Bombay High Court in the case of Govindarajulu Naidu versus Principal CIT, wherein it has been held that declaration under Vivad Se Vishwas cannot be rejected without giving a chance to the declarant to explain its case. In case any of the declarations under Vivad Se Vishwas have been summarily, without giving a proper opportunity to you, have been rejected, Bombay High Courts are again accepting and giving favorable judgments so far as writ petitions under Vivad Se Vishwas is also concerned. And the Bombay High Court has directed the principal CIT to review the matter afresh of the declaration which was filed by the appellant in that. So these were some of the important judgments that I felt could be of use to all of us. Moving ahead, 12A and 80G, again, a big pain for all of us. Gone are the good old days when 12A and 80G were granted for lifetime unless it was cancelled. 12A and 80G, all the existing cases have to be reapplied. The limit earlier was supposed to be done last year, I believe, within 6 months. But due to COVID, it was extended. And I believe 30th June is the date where all the applications for renewals of 12A and 80G have to be mandatorily made. I'm told that some 16-digit unique registration number will also be issued to all the new and existing charity institutions. Application have to be made in Form 10A. So 30th June is the due date at this point of time. So you all, I believe this is one of the most important things that before 30th June, let us make the applications for 12A and 80G so that we are in a position and there is no cancellation of registrations. Now lifetime registrations have been done away with. So the registrations under 12A and 80G will only be granted for a period of 5 years. And after 5 years, we'll again have to go back to the grind and apply for renewals again. So these were some of the things which I felt were applicable from 1st July or certain recent amendments that have come. Thank you all. It is always a great honor and pleasure to interact with all of you. Thank you to my team who also have logged in, and grateful to them for helping me prepare all the documentation that I was able to rely on. So thank you all, and I'll be happy to answer any queries that any of us might have.
Pleasure to hear you, Kapilji. It was a fantastic part. Akshay can pick up.
Yeah, thank you so much. Thank you so much, Kapil sir. May I now request the coordinator of today's session, CA Naresh Jakotia sir, to kindly take over the charge and also take over the question answer session. Naresh sir, over.
Thank you, Akshay. It's always mesmerizing to hear Kapil. Actually, it was a fantastic session. सबसे बड़ा पार्ट क्या था, जब ये सीरीज टॉप से सीरीज प्रोग्राम किया गया था तो एक लग रहा था कि इसमें ऐसा प्रोग्राम करें जहां सीपी अवर्स दिए जाए या ना दिए जाए। तो कॉन्सेप्ट था कि विदाउट सीपी अवर्स अगर आते हैं तो वो प्रोग्राम का रियल अटेंडेंस पता चलता है। ना वेरी हैप्पी टू शेयर कि मेंबर्स में अब रेगुलर बेसिस पे पीपल स्टार्टेड पार्टिसिपेटिंग। जैसे आज देखिए तो जेएस ओबेराय सर थे, पवन खाबिया जी रेगुलर आ रहे हैं, रितेश मेहता जी रेगुलर है, माधव विजोरी जी रेगुलर पार्टिसिपेट कर रहे हैं, संदीप जोतवानी जी रेगुलर है, राजेश काबरा, सचिन जाजोतिया, पूजा पोपली, नितिन रांका जी, कुणाल भुतड़ा, भद्रेश मेहता, शुभम पटेल, आनंद मदान, सब रेगुलर आ रहे हैं। दैट इज मेकिंग इट वेरी लाइवली। तो अल्टीमेट पर्पस ये हो रहा है कि ऑनगोइंग बेसिस पे इतने चेंजेस अमेंडमेंट है कि लगता है कि डिस्कशन से ज्यादा बेटर इवॉल्व हो सकता है, उसमें अपॉर्चुनिटी ज्यादा बेटर हम लोग कर सकते हैं। कुछ अच्छे क्वेश्चन आंसर्स भी आ रहे हैं लोगों के। एक क्वेश्चन है कि अगर रीट जो फेसलेस असेसमेंट की है, ये अगर क्वैश कर दिया जाता है हाईकोर्ट ने, जैसे ऑर्डर दिया दिल्ली हाईकोर्ट ने, मुंबई हाईकोर्ट अगर ये ऑर्डर देती है, तो वेदर द मैटर इज रिस्टोर्ड बैक टू द असेसिंग ऑफिसर या असेसमेंट प्रोसीडिंग ही क्वैश कर देंगे?
I'll tell you what has happened is in a couple of the judgments they have quashed the assessment, but in couple of the judgments they have also given leave to the department to comply with the mandatory requirement and then move ahead.
Right.
But nonetheless, the limitation which is there, which I believe is expiring on 30th June for certain assessments, the limitation will apply. So it is my suggestion to file the writ petition after 30th June. So even if the leave is given to the department, they will not be able to do it on account of the limitation having already been expired. So for certain compliances, they have given the department leave to grant the opportunity, etc., etc. But if you do it after 30th June, and if you get, even if then the High Court grants leave to the department because of limitation, they will not be able to do anything. So that is the end of the discussion. So the assessment will stand quashed.
Yeah, true, very true. एक है आनंद का क्वेश्चन है, आनंद मदान। अच्छा, जो लोग अनम्यूट कर सकते हैं अक्षय, तो उनको अनम्यूट भी कर दिया करेंगे ताकि ज्यादा लाइवली हो जाए सेशन। आनंद का क्वेरी है, सिंस द लास्ट डेट ऑफ रजिस्ट्रेशन अंडर सेक्शन 12A is 30th June 2021 and the income tax portal is not working, what would be the consequences if could not registered within due date?
I really feel it has to be extended. I really feel so. And in case if it is not there, I don't think anybody would have the courage to reject it. They will have to extend it. God forbid if the registrations are rejected, the only option will have to be to file an appropriate, either an appeal or a writ to restore it on the ground that the website was not working. But I'm very, very certain that it has to be extended considering what is going on now. And the requirements are plenty. I think 10A is not going to be an easy cakewalk for any of us. It's going to be quite a lengthy form, and there are too many requirements that will be required to be filed. So it's a time-consuming thing. It is not something which will happen very fast. Registration to ho jaye pehle, then I think registration to ho jaye pehle, then 10A kholenge. I think we have to go by that at this point of time. Yeah.
I'm getting a feeling कि शायद writ petition के ऊपर भी शायद एक कोई session रखना पड़ेगा, how to file a writ petition.
We can do that. If anybody is keen on that, I'll be very happy to share whatever limited I know, and still whatever limited I know, I'll be very happy to share my thoughts on it.
उसके लिए मैं बताता हूँ, रीट के लिए ना एक कॉन्टेक्ट नंबर दे दो, कपिल भाई is there, he is an expert in that and he can take it very, very appropriately.
Thank you so much. Thank you.
ऑडिट में क्वेश्चन वो क्या होता है, चार्टर्ड अकाउंटेंट प्रोफेशन है तो ऑडिट में कुछ ना कुछ नई चीज निकालते ही है। चेयरमैन सर का एक इंपॉर्टेंट क्वेश्चन है, जब अमेंडमेंट आया था 3 साल से 10 साल हो गया, ऐसे लग रहा था 148 का जो अमेंडमेंट था, तो ये समझ ही नहीं आ रहा उसको सेलिब्रेट करे या उसके लिए पेन फील करे, क्योंकि एक समय तो कुछ 3 साल कर दिया और कई जगह 6 साल से वो 10 साल कर दिया। तो चेयरमैन सर का क्वेश्चन है, for how many years the books of account are now required to be maintained?
Ideally, so you are required to maintain as per whatever the act has changed, because that has not changed. Okay. But coming to it, in future, if you are not able to substantiate your case, it will again result in additions. So for your own good, please ask your clients to maintain it for additional 2 years. Kar lo, 10 saal kar lo, because the onus to prove that you have correctly declared your income, etc., again lies on you. So to justify that, you would be needing all those documents, or what all documents you would be needing, we don't know at that point. So it's advisable to keep it, although Act says you don't need to, but considering one's own benefit, because it is going to benefit you only, it would be advisable to keep it. Although I totally agree with you, there is a stark contradiction between the two.
Right. Next question is Suji Vaidya ka hai. Is TCS applicable on collection of GST? If TCS is applicable on collection of GST, then whether it will be applicable on packing and freight charges also?
Yes, because again, it is on receipt basis. Okay.
And now, yeah. Another next question to that is that whether TDS will also be applicable if the packing and freight charges is charged in the bill?
No, because TDS is not on receipt basis. And there are plenty of judgments which says that TDS cannot be charged on any amount which does not represent the income of the other person.
Right.
So taxes पे TDS तो आएगा ही नहीं. There are 10,000 judgments which says that service tax, GST, VST पे TDS नहीं लगता because there is no element of income with respect to that thing is concerned. The only reason why TCS is being made applicable on GST is only because of the word used, receipt basis. Otherwise, I would have also opined that TCS should also not apply to anything which does not represent the income of the other person. So just to be on the safer side, and the amount is minuscule, 0.1%, 0.1% is nothing. So to avoid any confusion, that can be done considering it is receipt basis. TDS, I do not have any confusion. Do not deduct TDS so far as the taxes is concerned because that does not represent income. So far as packing charges are concerned, it is advisable to deduct that because that can be interpreted in a manner that it might include an income element.
The next question is, what would be the provision when a young CA professional or any other person who has recently started a business and has not filed any return previously, whether TDS at a higher rate would be applicable for all such new business people or professional?
Of course.
Subject to that 50,000 limit. Previous agar purane 50,000 ki limit hai to.
So if he has not filed the return of income, he has to prove कि उसका TDS TCS 50,000 से कम था. So then he'll have to give you 26 AS की copy.
Alek Mishra ji, Alek का भी query है. Akshay, can he be unmuted? वो question कोई example से link करके ही है as a question. He can put it.
Everybody can unmute themselves. They can unmute themselves.
Yeah, anyone can unmute and we can have a discussion over any of the provisions.
Hello.
Good evening, Alek here.
Hi, Alek.
सर आपने जो एग्जांपल दिया था जिसमें 10 लाख रुपीस का सेल था एंड सेल पे 0.75% in the month of October you have already deducted the TCS.
Correct.
And 6 lakhs were received and 4 lakh was received in April.
Correct.
तो उस केस में सर जो आपने जो TCS का कहा कि उसमें 4 लाख रुपीस के ऊपर डिफरेंशियल 1% वाला आपको TCS
Alek, आवाज थोड़ा क्लियर नहीं हो रहा था Alek.
तो आपने जो कहा कि उसमें जो 4 लाख रुपीस अप्रैल में मिला हुआ है उस केस में जो डिफरेंशियल टैक्सेशन बैठेगा 0.025% का दैट आल्सो नीड्स टू बी पेड सिंस आपका रिसीट बाद में आया बट सर उस ईयर में आपका जो टर्नओवर है या रिसीट है वो 50 लाख क्रॉस नहीं किया है.
No, but that हाँ तो then you can take the benefit of that. Take the benefit of that.
हाँ तो उस केस में if we have not deducted and we have waited for the 50 lakh तो उसमें कोई इशू तो नहीं आएगा सर.
कर सकते हो, बिल्कुल कर सकते हो.
Okay sir, thanks.
बिल्कुल कर सकते हो. Take it under that exemption of 50 lakh rupees. Surely.
Exactly.
एकदम valuable comment है, बहुत relevant है कुणाल का. Compliance cost is not a concern. Compliance is really a very, very high concern. Yeah.
Absolutely. I totally agree. The times have changed. Yes. The compliance has become a burden, too much compliance. I agree.
And बड़ा difficult होता है उतना update रहना. ये एक concept है जिसमें हर महीने कम से कम वो review कर लिया करेंगे हम.
Thankfully, Saket was very kind in giving me only income tax and not GST. So I think I should thank Saket कि GST का topic नहीं दिया मेरे को, नहीं तो उनके amendments तो are very and almost every day something is changing.
That charge has been given to Ritesh Mehta ji for day after tomorrow.
So nice. I'm glad.
Yes, Ritesh is here.
Thank you.
Any other question is there? Anyone can ask and can unmute, can share their experiences as well. If any other issue is there.
सर वो TCS का इशू मुझे लगता है सब जगह पर TCS का इशू है कि TCS आपने बोल दिया कि 0.075% और 0.1% सबने 0.075% के हिसाब से भर दिया.
I would chairman sir, I would say देखिए कितना भी है ना प्रोफेशनल अगर एक उसका पर्सपेक्टिव देखा जाए थोड़े बहुत तो लिटिगेशन अच्छे है, इसलिए मैं बोलता हूँ जिन्होंने 0.75% कर भी दिया है, अगर कपिल भाई ऐसा भी तो व्यू हो सकता है कि 0.75% काट दिया है, उन्होंने जेन्युइनली वो पर्पस को कंप्लाई कर रहे थे, ट्रेल ऑफ द ट्रांजैक्शन इज वेल एस्टेब्लिश्ड विद द डिपार्टमेंट, और फिर 0.25% का एडिशनल कंप्लायंस करना, उसकी रिपोर्टिंग करना, उतना जाना, उसकी जगह वन कैन गो फॉर द लिटिगेशन एज वेल, और कपिल भाई इज देयर फॉर दिस लिटिगेशन. देन
you can. I will not suggest that. I will not keep litigation as the first priority. My job is जितना compliance हो सके जितना compliance हो सके, जितना litigation avoid हो सके, I think it is beneficial for the clients, beneficial for the
अल्टीमेटली हो क्या गया, लोगों ने जब पहली बार आया था तब लोगों ने ये समझा कि बिलिंग पे कंप्लायंस वुड बी बेटर, तो बिलिंग पे आ गए. अब ये 0.75%, 1% और 194 क्यों? It has further changed the algorithm totally.
Correct. I totally agree. I totally agree.
Yeah.
You know, it's there. Yes.
Yeah. Akshay can take it forward, please.
Yes. Thank you, Naresh sir. Definitely, friends. आगे भी कोई questions हो तो Kapil sir is always available. On behalf of Kapil sir, I can say that, and on behalf of Nagpur branch of WIRC of ICAI, I would like to say a big thanks to Kapil sir for accepting our invitation and coming forward and taking this knowledge series to a different height. Definitely, day after tomorrow, we are going to have GST session wherein Ritesh Mehta ji, again a stalwart in his field, is going to address. So we request all the participants to join in that session as well. We thank all the participants for joining today's session. Thank you so much.
Before we end, just give an information to all the members that tomorrow we are having a vaccination camp at Nagpur branch for 45 plus, aged 45 plus. That's a free vaccination camp being organized in association with the Nagpur Municipal Corporation at your own Nagpur branch. So in case there are any members who are yet to receive their vaccinations more than 45, or you know the people who are more than 45 and they need a vaccination, they can definitely come down directly to Nagpur branch from 12:30 p.m. onwards at Nagpur branch, and the vaccination will be given to them at Nagpur branch itself. Further, for the benefit of all the members, we have talked to a private hospital for a vaccination camp for 18 plus at your own Nagpur branch premises in the coming week. Most probable date would be 24th of June. We have yet to receive the final confirmation, but 24th of June may be the final day on which we may be doing the vaccination camp. Definitely that's going to be a paid vaccination camp because NMC is not yet doing the free vaccination camps. So paid vaccination camp, 780 rupees per Covishield, that would be the vaccine. So would really request all the members to take the benefit of this, and we will be soon rolling out the circular as well as the Google form for the consent of the members, so that this vaccination, which is the need of the hour, should be taken by everybody. At least let's take the first dose. So thank you so much again, Kapil sir.
And thank you all. Thank you all.
Kapil sir. Thank you, Naresh sir, also for wonderfully coordinating. Thank you all the participants. We are signing off. Thank you.